Here are the crypto top headlines covered in this video. Binance.US plans to restore USD services in early 2025, says Interim CEO. Next, 10% of Ethereum validators signal gas limit increase. Also, Bitcoin trader sees larger BTC price dip next month as $100,000 holds. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Binance.US plans to restore USD services in early 2025, says Interim CEO. Binance CEO Richard Tang recently said it was premature to discuss the exchange's return to the U.S. Binance.US, the United States-based arm of global cryptocurrency exchange Binance, plans to resume U.S. dollar services early next year, according to Interim CEO Norman Reed. Binance.US is closer than ever to restoring USD services and targets achieving this milestone in early 2025, Reed said in a blog post on December 18th. Alongside the return of USD, we are committed to cementing our reputation as the best crypto platform for low fees and high rewards, he added. Reed's remarks came days after Binance CEO Richard Tang said it was too early to discuss whether the exchange might reestablish itself in the U.S. during a Bloomberg TV interview on December 9th. 2025 will be a breakout for Binance.US. In line with Reed's positive perspective on the Binance.US journey, the company plans new releases in the coming months as it continues to expand its products. We're leveraging new and impactful partnerships to improve our exchange infrastructure with expanded custody offerings, new wallet solutions, and other benefits, Reed noted, adding, I strongly believe that 2025 will be a breakout year for Binance.US, and our teams are hard at work building a comeback story for the ages. I welcome everyone to join us in taking Binance.US to the next level. Additionally, the interim CEO said that Binance.US is committed to cementing its reputation as the best crypto platform for low fees and high rewards. We continue to offer unbeatable features such as 0% fee Bitcoin trading on BTC to USDC, he wrote, adding that the exchange supports trading 160 cryptocurrencies and staking for more than 20 crypto assets. What happened to Binance.US? Binance.US launched in 2019 to provide regulated crypto trading services to residents of the United States. In June 2023, the U.S. Securities and Exchange Commission sued Binance, accusing the firm of failing to register Binance.US as an exchange. Binance.US suspended U.S. dollar deposits after the lawsuit was filed but eventually found a temporary USD deposit solution. In October 2023, Binance.US updated its terms of service, stating that the exchange would no longer support USD. The exchange said it wanted to transform into a crypto-only exchange in June 2023. In November 2023, Binance entered a $4.3 million settlement with the U.S. government for sanctions violations, money laundering, and operating as an unlicensed money transmitter. At the time, the Treasury Department said that Binance would have to ensure significant compliance undertakings, including Binance's complete exit from the United States. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, 10% of Ethereum validators signal gas limit increase. Ethereum core developer Eric Connor said increasing gas limits could result in a 15% to 33% reduction in transaction fees. The percentage of Ethereum validators signaling support for raising the network's gas limit rose to 10% as the community rallied to increase the maximum amount of gas allowed to be spent for transactions to be included in a single Ethereum block. On December 19th, the number of validators signaling a gas limit greater than 30 million increased to 10% of the network. Before December, the percentage of validators signaling an increase in gas limit was a little over 1%. The increase follows efforts by Ethereum community members to advocate for raising the gas limit to 36 million. Increasing the gas limits could result in lower transaction fees. On March 20th, core Ethereum developer Eric Connor and former head of smart contracts at MakerDAO, Mariano Conti, launched a website called Pump the Gas to convince the community to raise the Ethereum gas limit to 40 million. Their website, designed to rally support for a gas limit increase to 40 million, argues that such an adjustment could lower Layer 1 transaction fees by 15% to 33%. Connor called on solo stakers, client teams, pools, and community members to help with the initiative. In December, the efforts intensified, with Ethereum researchers joining in. On December 9th, Ethereum researcher Justin Drake said he configured his validator for a 36 million gas limit, saying that a 20% bump safely greases the wheels. Meanwhile, Emmanuel Awasika, creator-director at 2077 Collective, highlighted the benefits for developers, noting that the current gas limit can hinder the deployment of high-demand applications. Awasika told Cointelegraph that raising gas limits is a way for the network to show that it's giving ambitious devs something to work with. Awasika said that specific applications cannot be deployed with its current gas limit because gas prices will spike once the applications go viral, leading to a very degraded user experience. Risk of increasing gas limits too much. While community members move toward pumping gas limits on Ethereum, there are also those warning community members to exercise caution when increasing gas limits. Ethereum Foundation's Tony Warsartar said that this could pose serious risks to stability and security. The Pump the Gas site also acknowledged these risks and said that the core goal of Ethereum is to remain decentralized. If the gas limit is raised too high, we could create a scenario where the chain becomes too large for solo node operators to validate and download. Technology improves, however, and it does make sense to slowly increase it as time goes on. It said that raising the gas limits too fast could lead to unexpected externalities beyond storage and bandwidth. Our next top headline: Bitcoin trader sees larger BTC price dip next month as $100,000 holds. Bearish BTC price calls are back after the Federal Reserve sours the mood for Bitcoin and risk assets. Bitcoin circled $102,000 into the December 19th Wall Street Open as crypto sentiment cautiously recovered from a new macro scare. Fed halts Bitcoin bull market in its tracks. Data from Cointelegraph Markets Pro and TradingView showed 2% BTC price gains versus the daily open. Bitcoin had joined a crypto and risk asset sell-off at the hands of the U.S. Federal Reserve the day prior, during which BTC to USD fell to lows of $98,695 on Bitstamp. The blow came from Fed Chair Jerome Powell, who signaled reluctance over future interest rate cuts amid a rebound in various inflation gauges. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive, he said in a prepared statement at the press conference that followed the move to cut the benchmark interest rate by 0.25%. We can therefore be more cautious as we consider further adjustments to our policy rate. Both the S&P 500 and NASDAQ 100 ended the day's trading session down by around 3% as a result. The latest estimates from CME Group's FedWatch tool nonetheless put the odds of a further rate cut at the Fed's next meeting in January at just 8.6%. Analyzing low timeframe BTC price action, popular trader Skew remained modestly upbeat about Bitcoin's recovery. So far, no trend in validation, even with the sweep of last week's low and market demand, he wrote in part of an X post about the 4-hour chart. Would like to see price remaining strong above VAH. here in sustained passive demand under price for a recovery/higher. SKU referred to the value area high, or VAH, which made the area above $101,500 important to hold. BTC price risks January pullback. Others recommended taking a longer-term view amid heightened volatility, with Bitcoin still up 6% in December. BTC price action is choppy and doesn't look pretty, yet it's still trending up slowly. Fellow trader Dan Crypto Trades continued in part of his own X post. Dan Crypto Trades acknowledged the cathartic effect of mass liquidations accompanying the market downturn. Data from monitoring resource CoinGlass put the cross-crypto total for the 24 hours to the time of writing at $800 million. Back in 2021, Wednesday was usually the day where we saw a lot of liquidations. He added about market behavior during Bitcoin's previous bull market. It almost became a trend at some point. Up only, midweek liquidation wicks, retrace. Would be interesting to see if that repeats. More bearish predictions, nonetheless, came from those wary of the macro implications. Trader and analyst Mark Cullen warned of a larger Bitcoin pullback that is potentially still to come. BTC is still holding 100,000, which is key to seeing maybe one more push before the bigger correction hits, he warned ex-followers, predicting such a scenario playing out in January. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.